Or maybe I'll forget. All right. So what's up, guys? So this is our first free webinar in the house. So I want to say appreciate all of you guys. Merry Christmas to every single one of you guys. Like I've said before, kind of the biggest gift that I can ask for is such a big community, like all of you guys that not only look up to me, but you guys keep me motivated and keep me, being consistent and creative to come up with a bunch of new stuff. So I keep showing you guys what's real from not. Is it possible? What's not possible? So with that being said, I just got off a webinar with the students in the guided bootcamp. We just went over the markets. One of the things I said was like, I don't care if we're in December. I don't care if we're bank holiday. I don't care if anything. There's going to be high probability trade setups everywhere. If it makes sense, you take it. If it doesn't, you simply just don't take it. But we got to take something into consideration. We are, reaching the end of the year. Volume shouldn't be as high as expected, but that shouldn't be an excuse to not take a trade. It should just simply be a way to be a little more cautious and be more selective with the trades that you take. But it shouldn't just completely tell you, completely remove yourself from it. That shouldn't be the case, right? So with that being said, I'm going to show you guys kind of the top 3 pairs that I have coming for this week. And I actually want to come back to it next week. Hopefully, I want to see if they play out well to show you guys that there should be no excuses that bank holiday this or end of the year holidays, no volume this. That's pretty much cap in my opinion. The market has to keep moving always. So we're going to start off with NZD CAD. So I called this trade last week and I showed it on my Instagram story. I don't think it gets any simpler than this trade right here. It is very clear that we have been bullish for 1, 2, 3, 4, 5, 6, 7, 8 weeks. We have had a large momentum. And again, whenever we have a higher high, we need a higher low to go to the upside. If you all agree, type 1. If you don't agree, type 2. Okay, perfect. A lot of you guys are agreeing. Amazing. So we understand that once we have a higher high, we need a higher low. This higher low, all we're trying to do as traders is figure the fuck out when this shit's gonna stop to go to the upside. That's all we try to do. We just try to figure out literally this point right here. Whether it's going to be here, whether it's going to be here, here, we don't know. That's the point of the strategy. But there's some times where you could get in on this pullback right here, this sell. Now, this sell right here usually isn't the most high probability trade setup. But again, in the guided bootcamp, like we have a grade how to trade it, and you can figure out how to, give it a grade so you understand the probabilities of it going that way, right? So I showed this on the Instagram story. I pretty much called this pullback to the T from the exact point. This move right here, as you can tell, has had a strong push to the downside. And then it had a little retracement right here. If I get the same exact trade, the same exact size movement, I put it here, copy and paste it. So it's literally the same exact line. I just copied and pasted. You can tell it's pretty much double this move. And if you can tell when we had this push right here, it's double that move. And if this was the retracement, we can expect double the retracement. So if this is the retracement right here, we're just going to simply grab it, put it right here at the top of the move, copy and paste it. We can expect double the retracement to be where? Retest, resistance, support, weekly EMA. So we can expect a weekly time frame to have something like this to head to the upside. You guys understand that very simple example? Type 1. If you don't, type 2. I'm literally just by looking at where the market was before, or how I can predict a simple pullback. If you, again, it's a little trick that I use. You can just right click here and you can invert the chart. So now pretty much it's backwards. So if you can tell right now, if you're a better seller versus buyer, you would just wait for this retracement to this level, take the sell to the downside. All we did was just look at this push right here, retest to the upside, which is basically what we're looking for right here, retest to the upside, right? Another way that I was able to predict it was obviously we are pulling up to a level of resistance. We had our first weekly red candle after 8 weeks. It's just a lot that go into it, right? My EMA is the 50 EMA. The length is close, sources close, and then offset is 0. You guys can screenshot this, do whatever you want. But the EMA is just an added confluence. I don't really use it for anything else. And then obviously on the daily time frame, we had a shift, whatever. What I'm looking for this week, which is a counter trend trade, I need you guys to understand that it's not a high probability trade setup, but there's a strong risk. There's a high probability of this coming down here to go to the upside, correct? So in order for that, we can capitalize off of this short. How do I know we're going to go short? Well, we just go down to the daily and the 4 hour, and you can see that we have a high probability of coming back in, retesting this 4 hour EMA, retesting round psychological level 8600, and then we can have a rejection from here to then start heading to the upside. If you notice on the daily time frame, what this can look like is a little daily pullback level to here. And then after that would be the daily red candlestick that comes here. Then again, the pattern just keeps going. You get a little pullback. After the pullback, then you get the next sell to the downside, and then you're at this point right here, right? So this could be a nice little counter trend trade. You get the trade that comes into here, pretty much look for the sell to the downside. There's obviously a lot more that goes into it, but it's a very simple base. Next would be USD JPY. USD JPY, I would consider it maybe more kind of a day trade, because there's 3 areas where you can potentially sell from. You can sell from 0.1, you can sell from 0.2, you can sell from 0.3. How do I find these areas of interest? There's like a whole like education behind it, but the gist of it is that this is a strong level and this is a strong level. So when price comes into here, you would wait for your strategy to apply. You would wait for a shift of market structure to then sell. If you don't get that here, you wait for it to come into this level to then sell, and you would wait for it to come here and then sell. But notice what I'm saying. I'm only looking for the sells. I am not looking for the buys. I'm not interested in buying this from here to here, or buying it from here to here, or buying it from here to here. I'm only looking for sells at these points right here, because if you notice, we have the weekly is bearish, the daily is bearish, and the 4 hour is bearish, making this already a 30% grade towards your trade. So you already have the majority of the time frames bearish. Why are you interested in looking on buys? There should be no reasoning for you to look for buys. Literally everything here is telling you red. It's telling you red to the downside. Let's say this one were to be bullish to the upside. Let's say if this were to be bullish right here, for whatever reason the market creates a bullish, taking a sell still makes more sense. The higher time frames are bearish. It's really that simple. There's a way on how to realize how it's bearish or bullish. There's a whole education behind that as well. But this is the simplistic part of it. I'll just wait for a pullback to here to take the sell. Type 1 if you guys are with me so far. Type 2 if no. So I want to make sure you guys are with me. These are very simple. Perfect. How do you calculate your risk? Right here, just my FX web. Perfect. All right, cool. So now we'll keep going to Euro GBP. I like Euro GBP the best because we are trading with the majority of the time frames, kind of like USD JPY. The majority of time frames, the weekly time frame is bullish, the daily time frame is bullish, and the 4 hour is bullish. Meaning we are only looking to take trades that are buys. Now, how do we figure out that? Well, it's exactly what I'm going to tell you right now. So if you notice, this weekly time frame has created a higher high. Very simple, like NZD CAD. We need a higher low to go to the upside. So what we kind of need is a little weekly wick in this level right here to go to the upside. And that little weekly wick on the daily time frame will be about a daily red candle like this. A daily red candle into this level can then be a little daily doji here. After the daily doji, we can then get a nice bullish engulfing, exactly how we did it here, exactly how we did it here. Literally every single time we create a higher low. So all we're waiting for here is a higher low. And then when we go down to the 4 hour, what a coincidence, by the time that this does have this retracement right here, it would be tapping into the 4 hour EMA, because then the 4 hour EMA would then shift and help it push to the upside. So this is pretty much the most interested one, because we are going with the majority of the time frames. If this is simple, type 1. If it is complicated, type 2. and you explain how you grade your trades, that's like, it takes me 30 days to explain that. That's why I had a 30-day boot camp. Like, it's pretty impossible to do it off of just one Zoom call. What pairs do I trade for this week? I'm only interested in these pairs, the ones that I'm showing you right now. Yep, this is simplicity at its finest. All right, cool. Next, we have GBP JPY for all of my GJ traders out there. All of you guys love GJ. I don't know why. I hate GJ, but it's like the most known pair out there because it just has the most volatility. You guys like volatility, just dope. But if it were to be up to me, I wouldn't even trade it this week. If you notice, it is my number 4 on the watch list because I'm not that interested in it. Here we have the weekly time frame is bullish. The daily is bearish. So this is like this. So this is like this. This is like this. Let's make it red. And then this is like this. So if you noticed, it's literally choppy. It is just saying upside, downside, like it's just not making any sense. Compared to here, everything here is literally telling you up, up, up. This right here is just being choppy all over the place. So if it already be up to me, I wouldn't even be interested in it for this week. But if I were to take a trade, the only possible trade I see is a major counter trend trade. Because let's be honest, after this huge retracement right here that we've had, we can expect a nice pullback into this level to take the sell to the downside. But you can capitalize off of that, trade to the upside when this breaks above this little structure level here, then has a retracement, and then it heads up to here. But you got to keep in mind, let's say if you were to take this counter trend trade, you got to keep in mind that, set a realistic take profit. Don't do it so exact around psychological 16500. Make it a little short because, again, you're going against the trend. You're going against the bigger time frame, the bigger day trade that is bearish. So taking this buy right here isn't the most ideal setup. Can it play out? For sure. Exactly how it did here, exactly how it did here, exactly how it did here, here. It's the only reason why I'm interested in it because we're at a zone that it's done it in the past. But you got to understand just the probabilities of it stopping here versus here. So you just got to be more realistic with your take profits. So is that simple with GJ? Explanation. What do you guys think of GJ? I'm not interested in it, honestly. I could even put it as my last one because I'm not that interested in it at all. Super simple. I love how you, yeah, exactly. Do you check fundamentals? No. So I used to check my fundamentals. I used to have it right here as a Forex Factory all the time. But when I now like the trading plan that I have, you can't put news, or at least I can't put news into a Confluence because you're like, it's just a random outcome at the end of the day. You won't know what's going to happen until the news drops. Versus when I take a trade, everything that I'm typing up is a simple fact. It's already happening. So I can't really use news. AUDJPY, for all of you guys that saw my last YouTube video and have seen my weekly, just everything. I've been calling this price right here for I don't even know how much more time, and I'll make another ballsy call. And I'm telling you, I've been calling this since like this point right here. I've been saying, yo, GJ is going to hit 8,700, which is this wick right here, without a fucking doubt. Happened perfectly. So I'm gonna make another ballsy call, and I am not scared of doing it. AUDJPY, it is going to hit this level right here without a doubt. When? I don't know when, but I believe now we're going to have a nice retracement here. We retest weekly structure level, retest round psychological 9100, retest weekly EMA, and then we should have a nice push all the way down to this side here. So it's an overall move on AUDJPY. I'm not going to get too much into details with it because I feel, they're not as relevant because it's more of a swing trade. It would take longer to explain. And yeah, let me stop this recording here.